Okay, ICP answers for Chapter 7. The plan of an organization and all the related methods that are adopted within a business in order to safeguard its assets, enhance the accuracy and reliability of its accounting records, etc., is commonly referred to as internal controls, and those are very, very important. Number 2, the resources that consist of coins, currency, checks, money orders, and money on hand or on deposit in a bank or similar depository are your cash. Of course, that's your most liquid asset and is listed first on the income statement. That does not include post-dated checks. It does not include stamps. It does not include refunds that you are expecting to show up from the IRS sooner or later. You're not allowed to count any of those items as cash. Number 3, a cash fund used to pay relatively small amounts is established as a petty cash fund. It's commonly also referred to as an impressed petty cash fund. It's a box of cash that is used to pay out for small amounts, typically small miscellaneous type expenses or possibly postage stamps, maybe pizza for the management staff for a meeting at lunch, those types of items. Number 4, deposits recorded by the depositor that have not been recorded by the bank yet. These are deposits in transit. It is very important that you go back and you print out a full page copy of that one particular slide that talks about how to do the bank rec and what you have to do for the balance per bank side on the left and the balance per book side on the right. Make sure you can do those types of items. Number 5, short-term, highly liquid investments that can be converted to a specific amount of cash, typically because it is a known, widely known, publicly informed number. Those are cash equivalents, and they are typically grouped together with cash on the balance sheet due to their liquid nature. Number 6, a projection of anticipated cash flows, usually over a 1 to 2 year period, is your cash budget. It shows the outflows and the inflows and any financing needs that may be imminent, as well as how those items are going to be paid back. It covers lots of different line items in that cash budget. You will have some of those homework problems to complete, so make sure you use those PowerPoint slides as assistance on filling those items in. Number 7, company employees who evaluate on a continuous basis the effectiveness of the company's system of internal control, as well as putting in place best practices and helping out with operational efficiency and those types of things. Again, those are company employees, so those are our internal auditors. We are not talking about the external auditors that work at public accounting firms. We are talking about actual internal company employees who are auditors. Number 8, a check that is not paid by a bank because of insufficient funds in a customer's bank account. So the company has already received it, they took it to their bank and deposited it, that bank sent it to the customer's bank that the check was written out of or issued upon, and that particular bank said, oh, no can do, this particular customer does not have enough money in their account, therefore we're going to send it back to you. And when the company's bank receives it back, they automatically withdraw that amount out of the account because it was not a good check. This type of item definitely requires a journal entry at the end of the period when someone is doing the bank reconciliation. They, of course, are going to debit back the amount of that check on accounts receivable because the customer still owes it and the company has the right to still receive that amount. And they're going to credit cash for that same amount because it needs to be reduced in the cash journal, the fact that that money was taken out by the bank because it was a bad check. This is NSF check, also known as an insufficient funds check. Number 9, checks issued and recorded by a company that have not been paid by the bank. These items have not cleared yet. They have not been subtracted by the bank from the company's account. These are known as outstanding checks. They've definitely been written. The company has already subtracted them out in their cash journal or in their checkbook, but the bank has no idea they have not been that they have been written. Therefore, again, back to that reconciling of the bank statement, on the bank side, outstanding checks need to be deducted because sooner or later they will be taken out of what the bank shows available for use. 10. Cash that is not available for general use but instead is somehow restricted for a particular purpose, for example, some type of covenant or restriction in some type of loan documentation or possibly some type of trade or sales agreement. These restricted items of cash need to show up on the balance sheet as such so that users of those financial statements understand that the cash is not available for use. If it's going to sooner or later be used in the current cycle, then it can be listed in the current assets as restricted cash. If it's going to be used later, then it needs to be showing up as a non-current asset, again, still listed as restricted cash. Number 11, the principles of internal control consist of all of the following except C. We've talked about the fact that you need to establish responsibility, so delegate and designate who is responsible for a specific job function. You also need to have segregation of duties. You do not need to have one process or list of documented procedures that one person can do all of them. Each individual part of that process needs to be segregated out to multiple individuals. So one person can be the one to approve invoices for payment. Another person may be the one to actually post those invoices into a system. Another person approves the actual payment of the check to the vendor. Someone else may be the party that signs the check, and another party may be the one who does the reconciling of the bank statement. Having segregation of duties very much aids in eliminating the opportunity portion of the fraud triangle, and in doing so helps to eliminate or reduce the amount of fraud that can occur. Number 12, the following measure is recommended to obtain maximum benefit from the independent internal verification. The correct answer is D, because all of those items are correct. Make sure you understand why all of those items are helpful. 13, the concept of reasonable assurance rests on the premise that C, the cost of establishing control procedures should not exceed their expected benefit. So many times throughout your time here at UTC College of Business, you're going to hear us refer to the cost benefit analysis. So again, if it costs way too much money to provide reasonable assurance, then the cost outweighs the benefits. Okay, so what you need to be thinking of is let's be reasonable about whatever it is we're having to put in place for these particular types of items. Number 14, again, I've definitely rattled off a list multiple times in regards to what cash as deemed on the balance sheet represents. The answer here is definitely B. It is not A because A says postage stamps. It is not C because C also says postage stamps. And it definitely can't be D because it's not A and it's not C. Number 15, internal control over cash disbursements is more effective when payments are made by a check. Whenever payments are made by cash, it's not so good of a thing because cash, again, is the most susceptible to misappropriation, and we really would prefer not to have that happen. Number 16, the bank would debit the customer's account for all of the following items except. Recall how I said that the bank does the bank statement from their standpoint. And when we, as a company, deposit money at the bank, we are debiting our cash account when we do that, and they actually credit our account when we make a deposit because they are liable to us for the amount of cash that we deposited. So you need to look at these in a reverse fashion. The answer for 16 is C, collection of a note receivable, because when we receive money in from a note receivable, we as the company would debit our cash account when we deposit that money in the bank. Therefore, the bank would credit our account and credit us on our bank statement as they owe us liability. Look at the other ones. On each of those, we would be crediting our cash to reduce the amount of cash that we've got available, so the bank debits our account. 17 is D, and the reason why D is the answer and not A, B, or C, A and B are not possible because of the bonds. Here in regards to cash equivalents, and traded securities, bonds are long-term in nature and we're not able to really use those, as well as currency. Currency we are not able to use in cash equivalents because it's already included in our cash number. 18, a cash budget contains 3 sections: cash receipts, cash disbursements, and any financing that may be necessary. B. Number 19, the cash receipts section of the cash budget contains D. All of the answers are correct. 20, the cash disbursement section of the cash budget contains D. All of those answers are correct. Again, you'll definitely have some cash budget items on your homework assignments.